Hello everybody, welcome back to another episode, and today I'm going to be talking about what the CFD side in Trading 212 actually is. So if that sounds interesting to you, please leave a like and subscribe. Instructions have been on screen, and I will talk you through that in this episode. So the easiest way to describe what a CFD is to describe it as a trade of a cost for difference. So if an item costs £1 and it increases by another £1, you'll have made £1, and that is the difference. And if it decreases by £1 and goes to zero, you will have lost £1. So obviously, if it's at £500 and it goes up to 520, you will have made 520 per share that you bought. So benefits of CFD trading are there's a lot more things to trade. As you can see, we can trade indexes, we can trade cryptocurrencies, we can trade stocks, obviously, and we can trade things like Forex and things like that people generally like to trade. Also, we've got commodities, but these aren't all necessarily CFDs. Some of them are futures contracts, some of them are obviously just stocks and that. But when we're trading stocks on the CFD side, again, we're not actually owning any of the stocks themselves, we are just going on the price of them. So what this allows for is it allows us to buy a lot more shares. So you can see here a maximum of 50,000 right now in our account. How many shares in Google can we buy? That's 100. So 100 times 1,500 is obviously more than 50,000. That's because we're trading using leverage, you see. And what this means is we can actually maximize our profits, but then it also leads to larger losses when we do lose. And that's something that's important to note, I need to add. But if you do know what you're doing with Trading 212 and how to trade CFD, it's generally not something that people hold for a longer time. It's generally used for more day trading and things like that. But if you have a very, very large account, perhaps you could keep CFD positions open for a longer time. But yeah, there's so many things to invest in on the CFD side. So I just thought I'd do a quick talk through on this one. That's just the quickest way to explain it. So, unlike with stocks where you can't really lose too much money very quickly, if we were to invest in a CFD at the wrong time, we can easily lose a large amount. But we can easily make a large amount as well. So, let's just use this for an example. This is a demo account, let's say. So, we buy this index, let's say. We buy in at this point, and if it drops any further, we will lose a lot of money. So, you can see here at the start, we're already down 2,100, and that's due to the fact that the entry price is not necessarily the amount of points that it's on now. So you can see here, right now we're sat at around 12 and 13.5 is the entry point. So I'm just looking at the last three digits. So we're sat at 12.5 right now, 13.5 is the entry point. So the difference for that on such a large position would be 2,199. As you can see, that's just the quickest and most simple way to explain it. So you can see here, I just wanted to give you a quick example of how the large losses work and how large profits can also work in your favor, because we can see here that it's just bounced up to 1.7. So we've already made some of that back, but it just goes to show how quickly the prices move around. So it's not really for the faint-hearted of people, and it's definitely worth some research if you want to get into this side, because it's a lot more complex than the other two sides. So I thought I'd just talk you through it and explain what it actually is, and I will see you in the next episode. Goodbye.